I don't think we're going to see a Trump-led war on the Fed. I think what we're in is a new paradigm. I think the president was pretty clear, and I'm not an apologist for the president if I'll criticize him when criticism is due, but I think what he basically said, listen, I'd be saying the same thing if I were a private citizen. Whether that's true or not, I don't know. If I were president, this is what I would have said. Rising rates are a function of a stronger economy that's being taken place after the things we put in place in my administration. It's something we have to deal with. I'm not thrilled about it, but that's the cost of doing business. Other countries are not following suit. And in the short term, we may suffer. But in the long term, it'll benefit the citizens of the United States and our economy. That's how I would have handled it. But I'm not president of the United States.
Short term, are we at a disadvantage by having a stronger dollar, higher rates in the rest of the world, which is still basically super easy
Not
money?
if the stronger dollar and the higher rates are because our economy is doing well. If those things are happening because of other reasons, like people don't believe in our debt, that we're going to pay it back, and rates are rising, then that's a problem. But let's put this in context. I don't think this is necessarily a war with the Fed more than it is an opening salvo or a response, actually, in a currency war. Because last evening, China did not defend the yuan peg that they have been defending. So this morning you wake up to people in the currency markets asking, has China weaponized yuan? I'm not saying they have, but that's the beginning of it. Trump comes out today and says, you know what, we don't like a strong dollar. To me, this looks like the beginning of a currency war.
Yeah, so isn't that the main point when you think about the disparity? This is what Trump seems to be so focused on, this trade deficit that we have with China. And we know that they don't have to, they can be targeted about what they apply tariffs to, and they could let that yuan go lower, right? And that's exactly what happened in 2015. And we saw the volatility across risk assets all over the planet when they did that. And if you look at the weakness right now, it could be setting up in a very similar manner because this is a massive tool that they have in this trade situation.
It's interesting because, you were talking about it as well, but he's speaking as an independent citizen as president of the United States when he was speaking with Joe. It's just an interesting thing for all of us to watch, and I think it's odd like the rest of us. But I do think because of the fact that it's a strong economy that we've got right now, and I think that's something that has to be taken in, and everybody has to look at that and just determine whether or not we think that the Fed is doing the right thing. Right or wrong? Are they doing the right thing as we go forward? How many more hikes do we see the rest of this year? And I think that's sort of where he's maybe trying to temper it down in his own way.
Why should he be tempering it down? When you look at the data that we have, you look at the economic growth, you said we need to normalize, right? If you think in the last two market cycles when we topped out, Fed funds were at 6%.
Right.
So look where we are now. I think we should go with the guys who understand how to run economies rather than the guys who bankrupted five companies. And I want to take one other point. This is a really important point. He's saying when he was talking as a regular citizen, Eamon Javers, the interview that he's talking about, when he said that Janet Yellen should be ashamed, he was saying because interest rates should be going higher. So he's saying the exact opposite
on the campaign
thing.
trail.
It makes no sense, though.
Well, it's just, but also economically, if everything that the White House has put in place, and there's been some very positive things that happen, if our economy cannot handle a little bit of an interest rate increase, because to Dan's point, we are still extraordinarily low relative to history. If we can't handle that, then everything they put in place doesn't work.
Let's say.
I like when you play games.
Well, I think the question here is would the president's words actually influence the Fed? And I think we spoke to a lot of Fed watchers this afternoon who seemed to dismiss that idea. At the same time, from a market participant's perspective, the next time the Fed moves, let's say for some reason or other, let's say the Fed is concerned about emerging markets and the impacts of tariffs, and so they don't raise as quickly. Will we then look at that action through the prism
100%.
of
100%. You'll absolutely come back to that Joe Kernan interview. We'll play the sound on tape.
Was the Fed politicized? Exactly.
Unequivocally, without 100%.
So is that a bad thing for the markets? What this also does for him, though, is, in my opinion, whether he thought of this or not, I'm not suggesting either way, but if the market were to sell off, those comments give him air cover to say, you see what happened? Fed raised rates. Our economy was doing so beautifully.
They went too fast.
They went too fast. So it gives, and we talked about this when he talked about the market being a report card for his administration. What excuse could they use if the market went down? In my opinion now, this gives them a natural excuse if, in fact, the market does go lower.
All right. For more on this, let's bring in CNBC's senior economics reporter, Steve Leisman. Steve, what do you think? Any influence at the Fed?
I don't think so, but I wish I had a videotape I could roll back and play what Brian Kelly just said. And I think he may have hit the nail on the head here, which is this idea that the trade war has now morphed into something of a Fed war here. And I think, Melissa, you also spoke about this, and I hadn't really considered that, other than the fact that I do know that the thing the president mentioned here, which is the Chinese yuan is weakening, apparently in response to these tariffs that are out there. So what do you have? You have step number one, which is you have the tariffs, you have the retaliatory tariffs, you have the yuan weakening, you have the dollar strengthening, and so now the president has to come back and has to kind of, I don't know what the right word is, bully or otherwise cajole the Federal Reserve to say, you know what, we need you to stop raising these rates so far because we're getting killed on the yuan. So this, I think, what we have here is potentially, and I'm just speculating right now, is another fallout from the trade war now coming into potentially influencing Fed policy. Now, and I just want to, I'll just add real quickly, Melissa, that I think the Fed has to consider this, and I don't know how much they have to consider it, but the idea that the dollar may strengthen, which could have a negative impact on the economy because of the trade war, does indeed become a Fed policy issue. So hats off to all you guys. I think you got an interesting take out there.
And it's a major problem for the markets. We heard that yesterday at Delivering Alpha. Mary Erdos had mentioned that the dollar, the Dixie, is a one-year high right now, the yuan at a one-year low. I mean, this could come into play when it comes to earnings season as well, right?
100%. And Mary and Steve, Steve was there as well. Mary Erdos' comments were fascinating to me. The one thing, J.P. Morgan, the biggest thing there, one of the fears that keeps them up, I'm paraphrasing, was the moves that they're seeing in currencies. Unprecedented moves that typically happen over months now happen over days. And I don't think that's in large part due, in my opinion, to central banks. I mean, Steve can chime in, but I think the central banks globally have inserted themselves way too much into the conversation.
Hey, Steve, BK. Go ahead, sorry.
No, I'm just not sure that's right, because I think that what the Fed is doing right now is the Fed is on a program that's been really pretty much pre-announced more than a year and a half ago. And I've gotten some tweets from folks who said, look, the Fed is playing politics, raising rates under Trump and not under Yellen. Well, of course, it's Trump's guy and also the vice chairman who are out there raising rates according to a prior plan that pretty much seems to have agreement not only in the markets, which don't seem all that affected by it, but also, by the way, in Congress. If you notice yesterday, the last 2 days, not much pushback on Powell for the Fed's rate hikes.
Hey, Steve, I'm curious. You talk to central bankers all day long, and typically their response is, well, the dollar or the currency is the Treasury's concern. But when you talk to these bankers, how much do they really worry about a rising dollar and the impact that their policies are having on that?
Right. So, Brian, you're saying I talk to central bankers all day long means there are now people lined up for my job, as you might imagine. Well, here's the thing. Here's the line on the dollar and the currency, which is that they don't worry about the currency until it ends up affecting the macroeconomic outlook. And that's sort of an operative comment, which kind of works in the sense that if the dollar should fall sharply, fall abruptly, or requires or create some sort of change in the outlook for their dual mandate of employment or inflation, that's when they'd get involved. I will say this. Alan Greenspan said to me several years ago, he said this publicly as well, he goes, there's no outlook or there's no factor that can forecast the direction of the currency that's better than the flip of a coin. So I don't know that that's something that they can often take into account as to, where the dollar is going to go. So it's very difficult for them to use that in their forecast. I think they're much less concerned with it than I believe guys in the markets think they are.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.